Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. We're coming to you from the George Washington University School of Business right here in Duquesne Hall in the heart of Washington, D.C., Foggy Bottom. Coming to you a GW Investment Institute podcast and YouTube channel, educational and informational purposes only. Today on the podcast, what are we going to talk about on Market News? It's going to be a specific company. And this is a company that we've owned in the past called Alibaba. Now, this is a Chinese company, but it has an ADR. The ticker is BABA. Now, again, this is a Chinese company. And so doubling down, this is informational entertainment purposes only for this company. All right. So what is this company? So people may have heard this. People may have owned shares in this in the past. We did. And maybe you know something about this. This company does many things. So it is a conglomerate of sorts. And it's one of the sort of most renowned, most well-known Chinese companies. Jack Ma is the founder. Eddie Wu runs the company right now. And so we're going to get into that when we get into the management, but I'm sure you probably heard of Jack Ma. You probably heard of Alibaba. And so what do they do? All right. And why am I talking about this? Well, I do think it's time as an analyst, as a business person, as an investor, to be thinking about what's happening in China if you have not been thinking about it already. I was there in March of this year, and I was really taken aback by, sort of the how impressive, and I was only in a couple places, Beijing and Shanghai, how impressive the setup was there. And so it made me think, okay, well, it's time to make sure that we're really double checking and triple checking our work on what's happening in China and how does that flow through to some of these companies. We do own Tencent as an example, and we did own Alibaba in the past. Alibaba's been way up, so unfortunately we don't own it at the moment in one of the funds. But I think it's always important to stay fresh, what's going on. And you have this anecdotal information. Obviously, I spent some time on the ground there. And that was really, I think eye-opening in a few ways. Number one, I think the amount of hustle that's there in China is palatable. I do think, people want to work, people want to do things. And I think when you hear very from a distance that, how things work there, I think it's challenging just like any other place. If you go there and see it, I think you have a different appreciation. As an investor, certainly you can do lots of work, and we do lots of work from afar, but I do think having boots on the ground and doing some due diligence, I think is really interesting, important. And if you can do it, you can't always do that, but if you can do it, I think that's important. And when you think about a place like China, where you basically have two markets evolving for AI right now, I do think it's really important to pay attention to. Obviously, it's the second biggest economy too. And so for a couple of reasons. Number one, it's the second largest economy. US and China really dominate the global business scene. The global economic scene is US and China. And then if you think about AI, which is the dominant force right now that we talk about all the time, and everybody talks about all the time, and I think rightfully so. I think it's transformative, and it's already transforming things now, making people more productive. And there's going to unlock a lot of, I think, opportunities. And I think you got to pay attention to that. Well, the two places that are racing forward on that are the US and China. If you think about everywhere else, I think it's, sort of like a distant, really third place. Not that there's not things happening in other places, and there are important companies like ASML in Europe and ARM in the UK. And so it's not that there aren't important companies and people making great contributions to AI in the other parts of the world. But for the places that are really leading in AI and application of AI, I think it's really two, right? It is the US and it is China. And so a view into that is some of their companies. And so today we're going to be talking about Alibaba. We're going to use the GW Investment Institute framework to talk about that. And maybe obviously we've already been talking a little bit more broadly about, Alibaba as a company, or China as a country and Alibaba as a company. So when we think about that, let's dive in. Business, management, price, valuation, balance sheet for Alibaba. Ticker BABA. This is a ADR, American Depository Receipt. So this is a foreign company that trades on a U.S. exchange through something called an ADR. A bank sponsors those shares. All right. So today, September 30, when we're recording this episode, and it is hitting a 52-week high today at $182. And so that's obviously important. It's back off of that number. It's backed off of that, but it hit that today. And so, you would say, well, and we're going to get into the valuation. Maybe that's expensive. Not really. It's had a huge run. The numbers, you're talking 90%, 85% year-to-date numbers. The year-to-date numbers, 94% year-to-date. And so that's $94, 112%, excuse me. These are big numbers, right? And so it's already run super hard. And we'll spend a little bit more time on the valuation. But even considering that run, you're at the forward PE 23 times. Well, that's certainly Apple, 35 times, NVIDIA 41 times. Amazon, is closer to that, but Amazon's 26 times. And so it's cheaper than that, even after all that run. And I think it's important for us to really consider and think about what's happening in the AI world. They have one of the big large language models called Quinn, or the short name is Quinn, that they're using 1 trillion parameters. So I think it's important to be paying attention to Alibaba. And obviously you have access to potentially owning it if you want to own it by buying the ADR shares and participating. So the business, what do? Still, a lot of their revenue is driven from the retail side, Taobao and Tmall. What are those? Taobao, the consumer to consumer, a little more Wild West, anything can get put on there. Think maybe eBay. And then the Tmall is, these are third-party sellers on both these. The Tmall are vetted brands, curated, approved. And so, more certainty around what you're probably going to get, more deals on the Taobao. They comprise still the lion's share of the revenue for Alibaba. But what's been growing? Well, the cloud. So their cloud business would maybe, depending on how you count things, you put that in third place, let's say globally, AWS, Microsoft Azure, and then Alibaba Cloud behind that. And they've been growing that aggressively, and they're growing the AI business and infusing AI in their model, chatbots and everything else called short name Quinn 3 trillion parameter model. Depending on the benchmarks, DeepSeek would be the local open source competitor there in China. And depending on what you're doing, some of the things work better on the open source version of DeepSeek, and some things work better on Quinn 3. And so it depends what you're doing, but certainly really competitive right there in the heart of that race. And so, and obviously participating in AI, and really that's important. They also have a stake in Ant Group that was supposed to be spun off a while ago. Ant Financial was called, and now it's called Ant Group. They still own a big stake in that, and that's, you have Alipay as part of that, and certainly people are using that for the payments. And so really this is a big group, a diverse set of revenues, 20% coming from the cloud business now. And so again, lion's share coming from the retail, but growing on the AI, growing on the cloud business, becoming very important businesses for Alibaba. And I think it's important, when you talk about these businesses, well, let's start looking at some of the numbers here. And so what's the market cap for this company? $425 billion. So big company. It's been growing obviously rapidly, as we mentioned, 100% year to date. So it's gone up quite a lot. So that market cap has grown. And so what's the revenue? $138 billion in the trailing 12 months going through June 30, 2025. Their fiscal year is a March 31 number. So the trailing 12 months is $138 billion. And if you look at the growth here, let's go back to 2022, $132 billion, it grew 18%. And obviously you can see it then leveled off. It had issues. The government, stepped in. Maybe it was a little bit less certain what's going to happen. What's the future? So then 126 in 23, 131 in 2024, up 8%, and then 137, 5.9%, and now 5.4% at 138. So these are not huge numbers on the revenue side, but I think all those concerns, what people had are, not necessarily in the rear view mirror, but I think some of those things are like, the Chinese government wants these companies to succeed, but they want to make sure, that they succeed in their own way. And now you look at what's the projected March 31, 2026 will be the end of the fiscal year, 5.8%. And then you look out at 10% growth expected in 27 at 161. And so then let's get into the profit margins so we can rate the business here. The gross margins here, pretty consistent, kind good and then rising. So one of the good news parts of some of the trouble they had on the growing that revenue side is that they were able to grow the profit margin. So if you look at what is the profit margin in 2022 on the growth side, 38.6, and then 2023 you're looking at 36.7, and then 37.7 in 24, and then 40 for 2025 fiscal year ending in March 31, and then the last 12 months 41, right? And then projected to go to 42, and then 42 again in 26 and 27 respectively. So you were at 36 in 2022, and now you're getting 41 for the trailing 12 months. And so that's a good lift on that. So let's drop down to the net income margin. So that's, bonus points for them and that score so far. But let's look at the net margins. And so net margins right now, not quite as good, right? As you would think as a big behemoth like this in the tech side, 11%. And that's down. So that's where it's like, okay, maybe the business takes a little bit of a hit and we don't give it such a high score. And so we'll look at that over time. But, I think initially we can talk about a 7.5 for this, but let's finish out what it looks like on the net margins. And so net margins, 14 in 2022, and then 12 and 23, 13 and 24. And then their fiscal year is a March 31, 15.8, so 16. And then it's dropped in the trailing 12 months to 11.4. Not good. So that's where the ding comes in. Maybe this is an 8. Let's call it a 7.5. Because they have expected growth. They're definitely in these businesses that you would want to be in a market that you would want to be in, which is China. Again, the AI play here is US, China. If you don't have anything in China, I think this is at least a good way to participate in that market. Again, not a recommendation, educational. 12.2% is the net margin expected for 26, and then 14. So it is rising. So, okay, maybe we don't take off a full. So we say 7.5 for the business. Maybe you don't go down to a 7. So you net out, okay, should be at 8, 8.5, given the things they're in. You look at the gross margins, good, rising, all good. Net margins, not as good. So maybe they're not quite as efficient as they can be. And then let's just look at the free cash flow. They're investing heavily. So if you look at the free cash flow for the trailing 12 months through June 30, you're talking about $5 billion. And they're investing $15 billion in CapEx there. So that's good news from this perspective of, hey, if they're gonna compete, they're gonna have to put money to work, and that's expected to grow to 16 and 16.8 and 22, 26 and 27 respectively. And they're gonna, but good news is, even when that considered, free cash flow looks like it's gonna go to 8.4 billion from 5 to now. That's from June 30 to March 31, 26, and then 12 billion in free cash flow. So really growing free cash flow considerably there. And so I think that's something important to watch and pay attention to. But let's go back to the score for one moment. And I would say, all things considered, let's talk about 7.5 for the business. Now, let's get into the management side here. So if you talk about the management, and we might touch on some of the business again, because it is super important to be thinking about that. And I think one of the reasons, again, is why you would do research on this is because they're in the businesses that you want to be in. They're on the retail side. They have the connection with the consumers. They have the Alipay. Certainly that I think is fantastic. That connection with many consumers. They're absolutely, they have their own video. So think about them kind of like an Amazon eBay combo, plus, all the cloud stuff, which Amazon has too, and AI. And so I think, reasonably good compilation of assets to play. And I think that's important. So now Eddie Wu, one of the co-founders, Jack Ma, pretty publicly stepped aside. But I think now that has settled down. And Eddie Wu is one of the co-founders of the company. So I think it's in good hands right now. Good allocation of capital, has been doing, I think, a fantastic job, and let it through here. I think what could be considered a difficult period when Jack Ma stepped down. Jack Ma back re-engaged at the company, working hard, I think, to excel this company. And so I think that's important. The re-engagement, I think, is helpful when you have obviously the lead founder of the business back involved. So I think that's good news. Eddie Wu. So we're not going to spend a ton of time on this episode. Probably we'll come back to it to talk about management for Alibaba. But when we think about, the challenges that they've had, but the recognition that they also had that cloud, super important, AI, super important, and to be one of the market leaders in China, I think you got to give management a good score there. And again, having this difficult period, but remaining focused enough to get those things, who knows if they're right or wrong, but that's not the right terminology, or that's not the most accurate terminology, to make sure that they did not lose focus on areas of growth, especially very important ones like cloud, like AI. I think they get a decent score here. So I think that deserves an 8. So let's give Eddie Wu and team an 8, and Jack Ma back included. I think that bumps you from 7.5 to an 8. The team is back together. Let's see what they can do. I think it's super important, again, to pay attention to how they participate in the AI race in China. Again, the two big markets, US, China. Pay attention to both of those. This is one of the leaders, publicly listed company here you have access to in the US. So I think it's a reasonable way that you can also get up to speed on what's happening there, look through this company to that market. And so again, an 8 on the management team. Now, let's get to the price versus valuation. As we mentioned, market cap, $425 billion. So this is a big company. It's grown a lot, 52-week high. It's hitting it today and backing off that a little bit. But look, the valuation is not, you would think like, oh, huge run. This is super expensive, AI. But, China has been down. So even with up 100%, when you talk about year to date, you're trading at 23 times, right? That's kind of market company. So when you think about that not super expensive, 23 times, certainly compared to history, also reasonable against its peers. Obviously, JD, for example, we're not going to dive into that one today, and we've owned that one before too. Trading at less than half of that at 9 times. But I think it's important to consider. It's important to think about. I would rate this as one of the leaders in China for all the things that we mentioned on the business side and the places that it's in. So I think, obviously compared to some of its Chinese counterparts, it's going to probably have a slightly higher valuation, which I think is probably deserved, or at least the market has, set it out that way, which I think is probably accurate. So 23 times, but not super expensive when you're comparing it to other names. Again, when you compare that to 35 times for Apple, now I don't think it's the same risk adjusted setup. So you have to net that out. So it is cheaper, which accounts for some of that. All right. So what are we going to give then the valuation? 23 times on the PE side. So if we look at, the valuation, not cheap, let's say really cheap or anything like that at 23 times, but for all the things that it can do. And if you look at, you got to consider, the gross margin's good, 41, and it has been growing up to that point, but the net margin's back down, not you're not even at 20, you're 11 right now and growing, but free cash flow is growing. So some of these things, what does that work out to? I think that works out to a 7.5 if you rate that. So I think reasonably good there. And maybe let's take it down to a 7 actually, because I do think you have to ding it a little bit. All right, so now let's move on to the balance sheet. So taking a look at Alibaba's balance sheet, this is really not a huge concern. And so this is going to help you sleep at night, sleep like a baby. So if you talk about cash on the balance sheet, $100 billion, and the total debt, $32 billion, there is some preferreds of 11 here, but not a big concern there. So cash and cash equivalents, $100 billion, $110 billion, $32 billion. So you got net cash, a significant amount of net cash on the balance sheet, even if you back out on the preferred side, call it 60 plus billion, if even considering the preferreds, around 60. Again, we're sleeping at night like a baby, 60 billion in cash, generating 5 billion this year in free cash flow. So not a huge concern here. This is not something, again, that's going to keep you up at night, that you're going to be worried about. I don't think that it's something that any of us are that concerned about. So what are you going to give the balance sheet? All that net cash, sleeping like a baby. I think that deserves probably a 9 on the balance sheet. So if we look at the balance sheet and we give that a 9, I think that is a reasonable score for 60 billion approximately in net cash on the balance sheet. So let's pull this together. We've rated each one of the categories: business management, price valuation, and balance sheet. We've talked about the business. And again, just to rattle off a few stats before we pull all the score together. When you talk about this company, it's grown significantly, hitting a 52-week high today, September 30, when we're recording this show.
at $182. It's backed off that right now at $178. Doubled 112% year to date with the market cap, of nearly $500 billion, which is $425 billion, which is obviously makes it a big company, globally big company in the U.S. In a variety of different businesses. So when we talked about, Tmall, that's really the driver of the economics so far. But cloud is growing, AI is growing. Quinn 3 is their trillion parameter model. Pay close attention to that. So really important on the business side to think about all those things, to think about where they're going. So we gave them a 7.5 because, the gross margins were good. The net margin's not as good. So we gave them a 7.5 there. On the management, Eddie Wu's running the show. Jack Ma is back involved, kind of get the team back together, steered their way through a difficult period, remained focused, growing cloud, making sure they're at the forefront of AI in China. Again, US and China, the big economic markets, the big AI markets. Next up, on the valuation side, 23 times since had a big run. Not cheap, not super expensive, risk adjusted. Let's put that at a 7. On the price valuation score at a 10. And then on the balance sheet, again, sleeping like babies with net cash, 60 billion approximately net cash on the balance sheet, a 9 there. That brings you to 7.875, right? And so that's the score that we're giving Alibaba. I do think you should be, as a business person, as an analyst, as an investor, you should be paying attention to what's happening in China on the AI front, obviously in addition to what's happening here at home in the US, but you should be paying close attention to what's happening in China. Those are the leading markets. I think this company is a way to start to understand that. You should be checking out DeepSeek as well. But this is a company that's publicly listed in the US that you can spend time understanding what's happening. And that is a view into what's happening into the Chinese market. I think their entrepreneurs are excellent. I think there's a lot of hustle there in China. They want to work. They want to do good things. They want to, they want to support their families and they want to grow. And so I think that energy over there is very positive. We'll have to see how this all turns out. Obviously, between the two markets right now, the AI race is on, but we'll be paying close attention. We'll be getting our students to pay close attention to both these markets as well. And again, Alibaba, business 7.5, management 8, price valuation 7, balance sheet 9, comes out to a 7.875 for the total score for Alibaba, ticker BABA. Remember, this is entertainment and informational purposes only. And that's a wrap for this episode of Market News. Rodney Lake, see you back on the next one. Thank you.
Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.